Okay, ladies and gentlemen, welcome to today's live stream. I'm going to be frank with you. My brain is fried because I've got a very, very bad neck. I think it's all that whiteboard stuff that I've been doing, but I'm hoping you're liking that flavor. I got some more flavor coming over to you tonight, so make sure you watch that. But let's just address what's going on today, ladies and gentlemen. PPI came in lower. I don't buy it. I just don't buy it. So the PPI saying that cost of goods and services have come in lower. It's a surprise reading for what grounds? Now, fundamentally, the market doesn't care. All it sees is that the PPI is coming lower, so inflation isn't actually that sticky. But we've got core CPI data coming out tomorrow. So this might be one of those ADP non-farm employment change data. Tells us that there's less work. And then we had the non-farm payrolls, which gave us the idea that, yes, there was really less work. So with tomorrow's CPI, with the expectation that they think it's going to come in higher, are we in line for a surprise again tomorrow? So we're going to break it all down on what this means on assets across the board, because I do believe that we have officially priced in the rate cuts. But as we get more data suggesting that the inflation is coming down, now we're playing the game of how many rate cuts are we going to get this year. So I'm going to break it all down for you, ladies and gentlemen. We've had some wild news. I don't know if you know about Oracle completely smashing its earnings estimates, given the projections that the AI market is here to stay. And I'm saying this now. Your stock market going up is not because corporate profits are great. Well, clearly is, but it's all being done on AI and the hope of it continuing. All right. So let's just break it all down, understand where we are with that. I'm going to be diving into cryptocurrency, going to be reviewing Circle as well, because I'm going to be looking at buying that bad boy. And I'm going to be telling you when I am looking at picking that stock up. It is a long-term play, guys, but I'm just going to keep telling you I'm loading up again and again, and we're playing the stable coin issuance story and see where we can get with that. All right. So if you are new, welcome to the live stream. My name is Tino. Let's break it all down and make sense of this madness. I hope you do like the thumbnail. It took me a little while to come out and take my top off and all the little gadgets that I've got on me with the crown and, you know, but anyways. All right, then let's get with the program, ladies and gentlemen. Here we go. So stocks have welcomed this data about the PPI. The PPI actually came in low. So we just go and quickly review that right there and refresh this. Came in lower, which does solidify the idea that people are kind of excited about the fact that if the cost of goods and services are actually coming lower, then that means that the interest rates being at the levels that they are doing something. They had projected it, and this is wrong. Look, this is wrong. This was originally 0.9. It was revised from 0.9%, and it's actually coming in at 0.7%. They projected 0.3%, and now they are seeing a reduction at minus 0.1%. That's good news, okay? So the cost of goods and services is coming down, and it looks like it's come down quite a bit. PPI month on month came in lower, so that's great news. So now let's just go over and have a look at where we are with the interest rates. As you can see right now, bets have come in at 90.1%. But I'm going to refresh it one more time because the market hasn't actually opened fully for participants to come in and place those bets. So let's just understand where we are in a split second to help us work. Look, okay, so now that's come down a little bit, okay? Why is that coming down? Maybe because they're going over to here, which is the 3.74% region. Wait there. Let's have a look at where we are with October's expectations. Now it's getting more interesting. 3.75 to 4% in October's rate cut. Okay, that's what we're expecting. Traders are betting for a 69.8% chance that we're going to be at the 3.74% range. So maybe 50 basis point cut could be something that we want to see happening for the US. But primarily, the US, in my opinion, for things to be all good in terms of borrowing dollars and putting it to work and not going over to the euro and not going over into the yen. I mean, the yen, the time when the US interest rates were like 0.25% when money was dog cheap, right? The yen had a competitor, right? They're trying to get down to those levels again, around the 2%, 2.75%. That would be sweet, okay? Especially for the US dollar. Now, the problem is are we going to get there that quick? We would need about 12, 15 cuts, all right? And it's unlikely we're going to get towards that level. I mean, God, 0.5% on interest rates in the US. Wow, talk about the golden era. but you're just about to add $1.7 trillion to the deficit. So regardless of the rate cuts that we get, we're still owing more money and our debt is climbing up even more. The whole point of the interest rate cuts, ladies and gentlemen, is to effectively monitor the story of the yields. The yields are still high, 3.5% on the 2-year, 5-year coming in at 3.5%, which is good. 10 years coming in at 4%, which is really, really good. And then the 30 years coming in at 4.7%. The lower these yields are, the less pressure there is on the government on their refinancing of corporate debt. All right. Because remember, these here are the future expectations of interest rates. And if we go to the 10-year yield, you can see that the future expectation of interest rates, given that the rate right now is at 4.5%, you can see now investors are on the logic that it's at 4. That's their expectation of the future. So if you give the US government money, you're going to get yourself 4% locked on the 10-year bond. That's good. All right. The one good thing that we don't have is inversion on the yields. That means you earn more on a 2-year yield than you would on a 10-year yield. That doesn't make sense. Okay. But the problem that we've got is the 10-year yield is marking lower. It's getting lower. All right. Now, what we don't want to see is we don't want to see the 2-year yield holding out and the 10-year going down, which means participants are then favoring the 2-year. They go into the 2-year bond. The 2-year bond yield stays up. Investors come out of the 10-year, plan into the 2-year, and then the 2-year yield expands against the 10-year yield, which means that you've got yourself an inversion on the curve. And when yield inversion comes into play, that implies recession. So we've got to really monitor what's going on with these yields because these yields will paint the story. Okay? We've already got stagflation. We know that inflation is up. We know unemployment rate is up and the economy is apparently just doing well. Wrong. It's just slowing down. It really is. But the inflation data today is just going to be cause for excitement for everyone. Quickly going over into the asset that is actually making the stock market go is Oracle. Oracle is up 32.52%. It's changed its price projection from Goldman Sachs saying that they had a price target of $240 a share. They've changed it now to $360. They ain't doing too bad away from that. All right. That's their price future. And this is only because of AI. Their expectation and the money that they're going to be investing is going into AI. And this is a $678 billion market cap stock, getting close to the $1 trillion mark. You know, looking at the way this company works, look, 4,428 funds play this. 42% of management hold the stock and funds play 41% of it as well. However, subject to interest rates, they have a debt of 417,000, which is why it's imperative that they cut the rates because these companies right here are going to get refinanced on these debts. And if they owe 417%, all right, they can offset that, can't tax them, but primarily they've borrowed money in the business. So they're going to have to pay certain rates of interest back in return for that. So this is what's really concerning about the fact that the interest rates are so high. Okay. Now, quickly going over into other assets across the board. Let's just quickly dive into gold and then I'll be getting into cryptocurrency. Gold is going to continue to climb up, ladies and gentlemen. Of course, tensions overseas with Israel and what have you. It is going to be fueling investors to keep going into gold. Whenever you see gold dipping, it's usually the idea that they're going to get ready and continue up. Gold right now is working on two sort of macros. One, the safe haven story. So investors are like, oh my God, I'm getting concerned about where we are, war and what have you. They'll go into gold. The second one is the idea of the interest rates being cut. Naturally, yield on the dollar's going down. Then investors will be going over into gold to seek yield, even though gold is a zero yielding asset, right? What you've got to look out for with gold is this. Once gold starts to pull back, you'll know that the hedge has been complete. Gold will then, this is what we're looking for. I've got a price projection. My price projection for $3,000 gold has been hit. Cool. The next price projection is 4,500, which sits in line with Goldman Sachs. Okay. Now, if you look at this, this was the largest or the longest period of time that gold had consolidated around its all-time high. Okay. Now we've spent quite some time in gold. Okay. Now this is for anyone that wants to add gold to their portfolios. Okay. Remember, you've got to think about this when you're dealing with gold. Okay. You can see that they've broken out of this range right here. It's awesome, right? Everyone now is buying gold. It's the worst time, in my opinion. Okay. What we've got to wait for now is the idea that this is how hedge fund managers play gold. Okay. This is gold's price. Consolidate sideways, right? Inside of gold's price, there are anticipated events. Those events could be war, changes in interest rates, okay? Revaluing of gold, changes in monetary policy, all these things that are all adding together to create the idea that hedge fund managers need to collect as much gold as they can to protect their portfolios for any future events, okay? Here is what's happened here. Gold's price has expanded to the upside. Why? Interest rates are going to get cut. Awesome. Inversely to the interest rate goes down, gold's price goes up because yield on the dollar is being lost, or yield is much better elsewhere, right? So there's your hedgeable event. What you've got to look for now is when gold starts to correct and starts to get into a base. That means they're preparing for the next hedge. They can even drop gold's price even lower and keep on going down, okay? Because if they're not going into gold, it means they're all good about things. They can then go into the stock market. They can go into other assets. Commodities historically usually are a place where investors go if they are concerned about things, right? If gold's going down, oil's going down, then that means no one's got anything to be worried about. When gold starts to continue its drop to the downside, that's where you pay attention because they're preparing for the next hedgeable event, okay? So that's where you got to go and look on the news and try and find out what is going on in the news. Is there anything developing? Bang, you got yourself an idea of a war coming into play. Maybe Ukraine and Russia still going to continue. Maybe Israel is still going to continue. How about a new one, Taiwan and China, and the claim for the semiconductor business itself? They will be preparing it with gold, okay? Then all of a sudden, you start seeing gold marking back up. Unbelievable. It's starting to climb up, and then it breaks out to the upside. And you find out over here that Taiwan and China are wanting to compete with each other in regards to the semiconductor business. But you would have been part of the hedging because you'd be building that position inside of here, and then you would be selling at this point where people go to buy gold out of fear. Gold's making all-time highs. When gold is in the news, you're buying it at the wrong time. When Bitcoin's in the news, you're buying it at the wrong time. Yeah? That's how it works. So anyone that trades gold, keep an eye out on the time that they're spending consolidating. Right now, they're trading the idea of interest rate cuts because we haven't had them yet. No. Once we get the rate cut, bang, gold will then start coming back down again, okay? Prepare it for the next one. We get more data coming out. What's the labor market like? Oh my God, we could be in line for another rate cut. Gold's price will then climb back up again, all right? So it's really important you pay attention to gold because it's going to tell you where investors are going to be committed to assets or not. Right now, you've got the NASDAQ trailing at what? It's moving up nicely. It hasn't taken its all-time high out. And the only thing that's moving NASDAQ up is because of the fact that interest rate anticipation is going to be cut. So the yields are going down. That's good news for tech stocks. Oracle is one of them. It's fueling that move to the upside on the NASDAQ, okay? Now, let's get into a little bit of cryptocurrency to break down the logic of what we've got happening over there. Bitcoin. Viva. Viva la Bitcoin. Very nice. Very nice. Very nice. Platinum members, I hope you ripped that apart. I really do hope you took that. Solana, doing great. Ethereum, day off. All right, let's break it down. SEC, right? Tokenization of stocks. That is, in my opinion, the future of trading crypto. It is. Think about it. How many of you now can go onto a platform that will allow you to do that? All right. Certain account requirements are needed. If you're going to be a day trader and trade in the US stock market, you need a day trading account, pattern trader. So you need 25K straight up front. Okay. So there are some limitations, but you understand that once we get into tokenizing stocks, it just creates a whole nother income revenue stream for the companies that do provide it. Okay. It's absolutely massive. They can even split it up into fractional shares. You know about fractional shares. They can do all sorts of that. What they can do with blockchain and what they can do with cryptocurrency, blockchain and tokenizing stocks, it's absolutely massive. Of course, no different to any other stock brokering exchange. It's all centralized. We hype it up, but your decentralization is finished. It is. When you guys now in cryptocurrency are pleading with the SEC to let you have an asset to be accessible and traded over here and over there. I mean, look at this. BlackRock is preparing to launch its Bitcoin ETF in the UK in October. Hold on a second. Wasn't the UK like, no, we're not having any of that mad crypto stuff? Now it's jumping on the bandwagon. Well, it's only jumping on the bandwagon because of the MiCA obligations that are coming into play, of course, with the European Union and their regulated framework to allow people to participate in crypto. And I said it before. Now that crypto has come into Wall Street, Bitcoin is Wall Street's bitch. Sorry, it's true. That's it. You got what you wanted. You got the participants. Your prices are expanding to the upside. But now you've come away from the idea of cryptocurrency, decentralization. Those guys will be like decentralization, hoorah, and all that stuff. They're like, centralization, yeah. It's done. So, are you in it for the tech? Or are you in it to make money? Because when you got dudes like this that are in it for the money, in my opinion, it's economic imperialism. That's what this is. Who can do most of it and who's the best at it? BlackRock is up against strategy on the quest to pick up as much Bitcoin as possible. They got Bitcoin under custody. Remember that. Even though they don't hold it, they got it in custody. And what they do with it is up to them. I mean, investors sell and buy and what have you. They're just earning off the fees. But the fact is, decentralization is in the bin. All right? Never mind. What can we say? So, yeah, this story here is really important, okay, about, creating... It says here, where is it? SEC's updated strategy includes allowing platforms to operate as super apps that can facilitate trading, lending, and staking of digital assets under one regulatory umbrella. Regulatory umbrella. Oh, man. It's good, though. If they're going to start tokenizing everything, of course, you can play that now with BTCC on the tokenized asset market. Where is it? Here you go. So what I'm planning on doing is I'm planning on buying Circle through BTCC. Okay? Where is it? Circle, 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 circle. Where are you, Circle? I saw it yesterday. Where is it? There you go. I'm planning on buying Circle through BTCC, but then I'm also going to be buying it elsewhere. Okay? Different prices and what have you. But I'm going to buy it elsewhere. I'm just going to keep on building. I'm going to be trading a futures position per se on Circle, right? And then I'm just going to buy it effectively on spot elsewhere. So if I do get the opportunity to see that Circle's price is going down, I'm going to short it just off the back of that so I can actually, cover myself. But I've got the stock that I can buy here. I'm going to go to another exchange and just buy it on spot and leave it, okay? But most of my trading activity is going to be done on this. So I can get Circle here, $117, happy days and what have you. But it doesn't have to be Circle. You can trade Apple, tech stocks, NASDAQ, everything. You can do that, and Forex as well, which is good. But yeah, you want to check that out, go on BTCC's platform. The link is in the description where you can actually trade these assets. Gold, silver. Look, silver, man, you guys are missing out here. I've been screaming for silver for such a long time. Where are we? Where's my silver? Guys, $50 is on its way. Most definitely on its way. All right. Platinum doing really well, but silver and gold, they're just doing big numbers for us right now. Quickly going over to dollar yen for a split second to put things into perspective. Yeah, it's trading that side as well. But cryptocurrency holding out very, very well. It's just broken out of this area here, so just be very careful with breakouts because they could be fake outs as well. But we're just going over to the daily time frame to put things into perspective. There we go. What do we say? So, I've been saying that we want to see Bitcoin come back to this. Yes. What do we need to see Bitcoin doing? Closing it back up above the 50 EMA on the daily time frame. It is doing it now as we speak. So, the next daily candle, in my opinion, will confirm Bitcoin's move to the upside. That's my opinion. Okay. So, from a spot trading perspective, Bitcoin can sustain this cloud right here. Trade above the 50 EMA. Okay. In my opinion, Bitcoin will be valid to go to the upside. More confluence will come into play when you look at the 5 and 13 EMA crossing over the 50 EMA. So you might need to wait a little while because it's moving average here. 5 and 13 EMA would need to cross over this 50 EMA here to confirm the idea of the move to the upside. That could equally then lead to another candlestick going up here and maybe another candlestick right here to suggest the 5 and 13 EMA crossing over, because it takes quite a few days for the candlestick to the moving averages to cross over the 50 EMA, but we're not too far away. But in my opinion, Bitcoin now at this point here, if the day ends up showing that it closes above this 50 EMA, that for me would be a valid test of the 50 EMA to then see Bitcoin try and come up. It's the retrace back into it that will then confirm it even more to then see price going higher. Of course, order flow comes into play with it, but more importantly, just looking at the way they're behaving, it looks like things are pretty good for cryptocurrency in the bigger picture, okay? So just go over to Bitcoin, have a look at where we are with that order flow aspect. Yeah, we've got some liquidations coming into play. We've got a lot of offers getting ready to run in. I mean, $39 million worth of Bitcoin was sold at 113,480. So if you remember last night's video, we're hitting offers right now. There is aggressive behavior coming into play. And that there just gives me the idea that there are participants coming in wanting to get rid of Bitcoin on its momentum to the upside. So if you are a leverage trader and you're trading this, just accept, yeah, Bitcoin can make a high, okay, which it has done. There's your high of the day right there. Can easily pull away from it. It can retrace back into it, and then it can continue up to the upside, okay? So just make sure you manage your expectations and pay yourselves, ladies and gentlemen, all right? Cool. What else have we got? Bought Circle. Tino, Coinbase breaking up. Bins accumulating for a month. Oh, my days. How would it be decentralized? Be what makes them... Okay. Hope this chat is not offline. No, chat is not offline. Is there anything wrong with the chat? Can you take a look at Circle? Yes, we'll go over a look at Circle. Circle. So this is what we're doing. Circle. Where are you? Here we go. Okay. So it's up 2% in the market, pre-market. 125 fund owners. I'm being straight with you. I'm not going to buy anything until FOMC is done. Right? Everyone keeps asking me when you buy in Circle, After FOMC, I'm in Circle. That's the truth. Why am I going to buy anything when I don't know what the interest rates are going to be or what the path is going to be like? That's in 7 days' time. Okay? Let the markets do what it needs to do. FOMC, we make our purchase once we know where we stand with it. All right? That's where my head's at. Now, so Circle, price action. Don't even watch price action. I don't care about the price action. I care about the volume, market cap, average daily volume. 15 million shares. That, you know what? This was around 20 to 25, 28 million, right? It's slowing down. That's good news. The less shares that end up getting traded means most are actually holding out. Okay? So just wait. This is the first bar after a little while where we're seeing some activity coming into play. All right? This will start, in my opinion. It's going to start. All right? And if it goes to shit, welcome to trading, ladies and gentlemen. I'd find it very difficult for it to actually go that way. All right? Just look at what happened to Coinbase on its IPO. Right? Look what happened there. Coinbase IPO. There you go. Just collapsed, and went all the way down to $32 a share. Back to its IPO, $455 a share. All right? Takes a lot to get listed into the US stock market. There has to be a purpose. There has to be a business protocol. With stable coin issuance coming out right now, yeah, circles are going to be a good shout for me. Anyways, when was the last time you said capish? Capish? Can you look at ETH? I expect at least 4,500. Yeah. You're stuck at a moving average, ain't going anywhere. Got to look at the commitment of open interest. All right, so this open interest is stacking up on Bitcoin, stacking up a lot here. Yeah. So these are the levels that are like, I'm only interested in. I want everything above 400 million. So you can see that we are in a very interesting point, heading towards the FOMC, heading towards the idea that interest rates are getting cut, heading to the idea that inflation's coming down. It's all good news. But you're at all-time highs already. So just be very careful with that. Mad love to you, Zigzag. Okay, then. With that being said, ladies and gentlemen, I'm going to love you and leave you. My brain is fried. The market will be opening very, very shortly. But I'll be tuning into you all later on tonight. We've got another little whiteboard edition. And I've got some goods that have arrived. So I've got to sort those out in line for tonight's whiteboard session. All right? So be sure to like and subscribe. And I'll be tuning into you all later on. All right? Peace.